With the first Cybertruck being successfully produced, Tesla is gearing up for a new era, so is this the right time to buy the stock? Keep watching as we go through the latest Tesla news updates along with an analysis of the stock. But before we do that, subscribe to our channel $1 World for regular stock market updates. The highly anticipated second quarter earnings release from Tesla is just hours away. Given the stock's performance, the statistics had better be solid, with profit margins from the company's automotive division being the important figure to watch. It is hardly a bold statement to suggest that expectations are high. Tesla stock is up around 138% year-to-date and roughly 62% over the last 3 months as of Wednesday trade. Deals with other automakers to open up its supercharging network to non-Tesla EVs as well as confidence about artificial intelligence-related firms have recently boosted shares. Tesla employs artificial intelligence to train its self-driving features. According to FactSet, Wall Street expects operating income of $2.7 billion, earnings per share of 80 cents, and sales of $24.2 billion this quarter. Tesla made $2.7 billion in operating income, 85 cents per share in profits, and $23.3 billion in sales in the first quarter of 2023. Tesla made $2.5 billion in operating profits, 76 cents per share on $16.9 billion in sales in the second quarter of 2022. Profit margins will be just as significant as absolute sales and earnings metrics. Tesla earned a gross profit margin of roughly 19% in the first quarter, excluding the impact of regulatory sales credits, down from about 30% of the first quarter of 2022. The losses were caused by significant price cuts in early January. Wall Street anticipates automotive gross profit margins of 18% to 19% for the second quarter, excluding the impact of credits. Investors should be satisfied with anything around 18%, as long as they hear that profit margins are anticipated to grow in the second half of 2023, when Tesla management speaks to investors on an earnings conference call beginning at 5:30 p.m. Eastern Time. Price cuts were a near-term pain for long-term gain strategic move, according to Wedbush analyst Dan Ives, who wrote in a recent research. So far, this has been a home run strategy, and now it's all about margins trough. No more price cuts, and demand remaining firm, with some Model 3 and Y refreshes also likely on the horizon, followed by the drumroll for the Cybertruck later this year, Ives said. He anticipates that automotive profit margins will rise by a couple of percentage points in the second half of the year compared to the second quarter. Ives recommends Tesla shares as a buy, with a price objective of $300. Colin Langan, a Wells Fargo analyst, assesses Tesla shares as a hold with a $265 price target. Langan anticipates that automotive gross profit margins would fall below 18% and that greater price cuts would be required in the second half to keep volumes expanding. Tesla delivered around 466,000 vehicles in the second quarter, a record and an increase from approximately 423,000 in the first quarter. In pre-market trading Wednesday, Tesla stock is flat, while the S&P 500 and Nasdaq Composite features are both up around 0.1%. Let's see the stock news of Tesla. As of July 18, 2023, Tesla stock closed at $290.38, showing a downward trend since reaching its peak at $314.67 in April 2023. The stock's current price-to-earnings ratio stands at 86.31, indicating that investors are willing to pay a high multiple of Tesla's earnings per share for each share of the stock. This suggests that investors have optimistic expectations for the company's future earnings growth. Over the past 5 years, Tesla stock has outperformed the broader market, boasting an impressive return of 1,190% compared to the S&P 500's return of 180%. However, there are several risks associated with investing in Tesla stock. These include the company's high valuation, its dependence on the leadership of CEO Elon Musk, potential exposure to government regulations in the electric vehicle industry, and increasing competition from other electric car manufacturers. Looking ahead, the outlook for Tesla stock remains uncertain. The company faces various challenges, but it also possesses strengths that could contribute to long-term growth. Notably, Tesla has a strong brand and a loyal customer base, as well as a dominant position in the electric vehicle market. Additionally, the company has plans to expand into new markets and continues to prioritize innovation. Ultimately, the success of Tesla stock will hinge on its ability to effectively execute its growth strategies and navigate the obstacles it confronts. Investors should carefully consider these factors and conduct thorough research before making any investment decisions related to Tesla stock. On the other hand, as is customary, Tesla has already released its Q2 car delivery and production figures, which account for the vast bulk of the company's income. Tesla reported earlier this month that it delivered a new record of over 422,000 electric vehicles in the first quarter of the year. Tesla also stated that it was able to create approximately 480,000 automobiles throughout the quarter, setting a new record. During earnings reporting, delivery and production statistics are always somewhat altered. Because of the delivery figures, analysts often have a reasonable notion of what to expect in terms of revenue. The Wall Street average for this quarter is $24.220 billion, and Estimize, a financial estimate crowdsourcing website, anticipates $24.836 billion in sales. This would be a tiny gain over the previous quarter since, while Tesla achieved record deliveries, it had to cut pricing to do it. It would be a tremendous boost in income over the same period last year, but it wouldn't be a fair comparison because Tesla had to temporarily shut down Giga Shanghai during that time period in 2022. Tesla strives to remain minimally profitable every quarter while investing the majority of its funds in expansion, and it has been successful in doing so for the past 2 years. The Wall Street average for Q2 2023 is a profit of 80 cents per share, while Estimize predicts a profit of 87 cents per share. Despite expecting record sales, Wall Street anticipates profitability to be lower than the prior quarter due to the previously announced pricing decreases. At the present price level, which has declined dramatically during the year, most of the shareholder attention will most likely be on gross margin and operational profitability. With Tesla Energy having record quarters that are gradually beginning to have a minor influence on Tesla's overall performance, it might be a topic of discussion again this quarter. However, based on the top voted shareholder questions, it appears that the Tesla shareholder community is more interested in looking into the future. The following are the top 5 questions that Tesla is expected to answer on the conference call. Has anybody approached Tesla about licensing FSD? When will you learn more about our Cybertruck orders? What are the estimated delivery dates, prices, and specifications? Have you considered providing FSD transferability as a lever to allow existing consumers to move to a new Tesla rather than being tied into old vehicles due to the cost of FSD? What is the current state of the 4680 cell? How far have you strayed from the specifications you put down on Battery Day? When do you intend to complete the tasks you set out on Battery Day? Do you intend to speed anticipatory investments in supercharger growth to minimize congestion when you expand the North American supercharger network to other EVs? And how will you cope with significant lead times to upgrade electric T&D services to these locations for multi-megawatt loads? As always, Tesla stakeholders and Twitter users exhibit an overwhelming sense of confidence in the stock's continuous upward trajectory, and it's not hard to see why. Tesla has undoubtedly established itself as one of the most prominent and influential companies in the market as of now. With its innovative electric vehicles, groundbreaking technology, and ambitious vision for the future, Tesla has captured the imagination of investors and consumers alike. The company's charismatic CEO, Elon Musk, is a master at generating hype and excitement around Tesla's endeavors, further fueling the bullish sentiments. Additionally, the electric vehicle industry's overall growth and the increasing global focus on sustainability provide a promising backdrop for Tesla's long-term success. However, it's essential to recognize that no stock is immune to market fluctuations and uncertainties. While Tesla's exceptional performance and game-changing advancements have garnered immense confidence, prudent investors must still exercise caution and consider the potential risks associated with any investment. Remember that this is not financial advice and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think the stock will make you rich or not in the comments section. Hit like and subscribe to our channel $1 World for more such penny stock videos, and we will see you in the next one.